The railroad has awarded you a grant of RSUs. Now what? Learn the basics and learn what to expect with the granting of restricted stock units. Welcome everyone to the Highball Advisors Railroad Retirement Whiteboard. My name is John McNamara of Highball Advisors, and today we're going to talk about restricted stock units, right? Just a basic understanding, a guide to it. RSUs, as they're called. You know, for a lot of railroaders, they're thinking RS, they're thinking road switchers. No, restricted stock units. These are ways company incentivize employees and award employees and retain their services, quite frankly, to stay with the railroad. So let's just go over the basics. I'm just going to give you a foundational so that you kind of understand it, and you won't, it won't give you a lot of strategies, but at least you'll understand what you have. So from the basics, right, you're given a grant, a promise from the railroad to deliver you a certain number of shares, right? But they vest, so there's certain requirements, usually they're time requirements, in order to receive the restricted stock award, all right? Continuing on, they always have value, which is interesting from stock options, where you might be given a grant of stock options and they could be at a higher price and the stock could be trading at a lower price, in which case they have no value because you would never exercise stock options at a higher price when the underlying market is a lot lower. So when they exercise restricted stock units, you're giving the shares are delivered to you at the price of where the stock is at that time. So from the railroad perspective, right, they'll never actually ever give you the shares until the day of delivery. So for them, it's just a bookkeeping entry, right? And the other thing that's important to remember is even though you're awarded or granted the restricted share units, you have no voting and you get no dividends on those shares until they're in your possession, right? So for those years where they're not vested, they won't be returned. So let's talk about vesting here for a minute. Right, so what is vesting, right? It's when the shares are delivered, and I'll use an example of how this would work out. So let's say you were given an award of 5,000 shares by the railroad, right? So at grant time, you have 0 shares, right? So these are going to be vest equally, 25% at a time, over 4 years. So at the 1 year mark, you would get 1,250 shares, and then at year 2, you would now have a total of 2,500 and so on, until at the end of the year 4, on the anniversary of the date of year 4, you would have received 5,000 shares in total by the end of year 4. So that's how vesting works, all right? Now let's go to the important part, right? Taxation. You know, this is where the rubber hits the road. So at taxation, taxed at delivery, and it's treated as ordinary income. So imagine if you say, okay, I have, going back to this example, let's say you got 1,250 shares, right, at $20, or let's use the simple math, at $10, that would be $12,500 of income, right? That would be ordinary income. So you've got to pay, that's the tax that you've got to pay on that. So they withhold your Railroad Retirement Board tax, right? That because it's income. So your Tier 1, Tier 2 would be taken out, assuming you're still below the maximums. Your Medicare would be taken out, state and local. So that grant, you've got to pay income tax on, right? So if you receive $10,000 of value from the grant, you're going to have to pay $10,000 of ordinary income tax. So how can you pay the taxes? Well, there's multiple ways to do it, depending upon each railroad. You could surrender some of your shares. So let's say if you have 1,000 shares, maybe you could surrender 300 shares to cover the taxes and just receive 700 shares. Could be one way. You could sell to cover, so you can have 1,000 shares and sell 300 right away. Or some you can just make a payment, right? I'll just write you a check and you know, there's the payment to cover the taxes for the grant because I want all the shares. And you just make the payment. All right, so let's work through an example of the granting process. So let's say in this example you get granted 4,000 shares, 4,000 restricted units, right? So the price is at 0, or you get no shares. So on the 1 year anniversary, the stock is trading $20. You get 1,000 shares, okay? And then at the second year, another 1,000 shares at 25. All right, third year, stock goes up to 30, another 1,000 shares, okay? Fourth year, where the final 1,000 comes, another 1,000 shares at 33. So over this whole period of time, because you got to do it every grant, you have paid ordinary income tax on $108,000, right? So now let's say, okay, well, I got the shares at least, and I like the railroad. I think it's going to be doing well. You might say, well, in 2 years later, you sell it, right? Because the railroad stock's gone up to 50, and you say, okay, I'm out. So I might sell my 4,000 shares at 50. I would receive $200,000, right, for that. I've already paid $108,000 on it, so that's my basis, my tax basis for that. But I do have $92,000 in profit, which I can pay long-term capital gains on. Right, long-term capital gains, which was at a lower rate. So you need to hold the stock for at least 1 year to get the long-term capital gains benefit from it. So this is just a nice highlight strategy of the essentials of restricted stock units. There's a lot more into it as far as strategies, because at the end of the day, you start accumulating a bunch of RSUs, it starts building up your net worth. It starts throwing off your allocations because you have more and more equity in the company, and everything is going to start revolving around how the performance of that stock is going to do. So you want to look out for that. So I hope you found this helpful. Please subscribe to my YouTube channel. As always, reach out to me. I have a boarding for railroad retirement process. It's a 15-minute process, and we can start talking and discussing about these things and all other things related to comprehensive financial planning. As always, everyone, please stay safe, stay on track, and take care. So long, everybody.